And welcome, it's Mary Ellen McGonagle here with your weekly Edge show for Friday, June 23rd. Let's take a look at what we're going to review today. And first up, it is going to be taking a close look at the broader markets. Where has this week's pullback positioned us and what we can be on the lookout for going forward. Also, some of the news that drove the market's action last week. We did see a pullback more in some areas than other, and I'll share with you one of the reasons why. Last up is viewer question of the week, and it's all about potentially buying this pullback, how you can tell if your stock is simply pulling back or is there further downside ahead? So here we are with the news from last week, and certainly Fed Chair Powell's talk in front of the House for 2 days last week was very impactful because he cited repeatedly that inflation is still quite a bit above that 2% level that they are on the lookout for getting. And with that, he did announce that there will be 2 more interest rate hikes between now and year end. That in turn did push particularly growth stocks lower with that higher interest rate potential. We did see home building confidence climb as well as housing starts jump. That gave a nice boost to the housing stocks as well as related housing stocks by way of building related stocks as well. But we also got news that the Bank of England as well as Norway raised their interest rates by 0.5%. The impact there was because the reason they raised was that inflation, which had been leveling off, began to rise again. And that brought concerns to the U.S. investors that it could occur here as well. So we also did see weekly jobless claims increase. That was not totally impactful, but we did also get news today that U.S. business activity remains robust, with the U.S. economy running at about 2%. Again, that interest rate fear loomed into the forefront, and we did see the markets pull back. Now, next week, we will get very impactful core personal consumption data. That's that CPI data that the Federal Reserve looks at very closely for a gauge of inflation. And then we will get durable goods orders as well. So here we are. Let's take a look. Where did we close the week with the markets? And here we are with the daily price chart of the S&P 500. You can see that the rally over the last 2 prior weeks did push the markets into an overbought position with that RSI above 70. We had a very orderly pullback, certainly given the backdrop of a rise in interest rates. We do still have momentum in positive territory with both the stochastics and the RSI, keeping an eye out at that 4,300 level, as this is going to be a critical area of potential support depending how the markets perform next week. Here we are with the NASDAQ, and we also had a very orderly pullback coming out of an overbought position with the RSI. We did close below this 10-day moving average. However, we are above this key 13200 level, which is going to be that next area of support. It had been acting as potential upside resistance before. So from here, let's take a look at the underlying sectors in the broader markets. On the lookout, as always, for money flows, where relative strength is shaping up. And these are the 11 sectors here. I've added a relative strength indicator and sorted it in descending order. And what we can see is up at the forefront here, consumer discretionary, communication services, technology, and healthcare. All of these are growth areas, and within healthcare, it's important to note that there is a growth component, and that is their medical products stocks. I'll share with you what they look like going forward, but it is of note that growth stocks are up here at the forefront. We did see cyclical names pull back a little bit more than the markets. That's industrials and basic materials, all about that global recession fear given rising rates, certainly in the UK. However, they do still remain in positive territory, both of these sectors. From here, we're going to take a look beyond these 11 sectors and see some of the underlying sub-industry groupings and see how they fared. I will share with you here IHI, which is the medical products, and this is an area that I covered in last week's show where we had this nice gap up into an uptrend, and a number of these medical product stocks are performing well. If you have not seen that, I would suggest taking a look at last week's show and it'll share with you exactly why. But let's take a look at some of these areas in technology that did get hurt more than the broader markets. Here we are with semiconductor ETF, SOXX, and the group was down over 4.5%. It is dipping now below this 21-day simple moving average. We have this MACD crossover indicating that this uptrend, we will see if it's able to pause here at this 470 level, or if we will go lower. If we do get that negative RSI, it would not be good news. Software stocks also pulled back more than the markets, and they also were in that overbought position. However, they are better positioned than semiconductors above this 21-day simple moving average. Another key area, certainly from my work, that I will be keeping a close eye on. Now, we also did get quite a pullback in regional bank stocks, and this is KRE. The group was down over 8%. And of note is the price action did, in fact, invalidate this downtrend reversal, which is now back in a downtrend. KRE has broken back below that 50-day, and we have a negative RSI. So for those of you on the lookout for a reversal of bank stocks, it does not appear to be materializing at this time. From here, I did want to talk to you about that concept that we are seeing a number of stocks. I mentioned to you certainly those high growth tech areas that are pulling back. And from there, we're going to take a look at names in the semiconductor space that are not finding support. They're pulling back further, and this is going to be helpful for you when you're looking at individual stocks. Here's Texas Instruments, not a particularly healthy name going into this week, but of note is that the stock's pullback this week pushed the stock below each of these key moving averages and on very high volume, which indicates distribution. We now have that RSI in negative territory and that MACD crossover. So from my work, further downside ahead for TXN. From here, we can take a look at another semiconductor stock that is actually holding in quite well. And this is what you want to see. The broader market indice group was down 4.5%. This is Lam Research, LRCX. And you can see that. Let's go ahead and pull up the weekly here very quickly, and you'll see that it was down only a little bit more than 0.5%. The stock is finding support at that 21-day moving average. Your momentum indicator still up here in positive territory, and this is what you're going to want to be on the lookout for. Names that are not going down as much or more than its particular industry group and that are generally holding in well. These are the names that when that industry group comes back into play, these stronger names will be first out of the gate and they will go on to outperform. Let's take a look. I talked to you about the software industry group, and here we are with IGV again. And we did see certainly names in that particular space that pulled back more than that group, but I'm going to share with you a couple of names that did not. They held in really quite well. This is Adobe, ADBE. You can see that its stock is trading back above this 10-day moving average. Momentum still very much intact. One other name that we can look at, WDAY. This is Workday software company, and you can see that it barely was touched by the pullback in the overall group. This relative outperformance, again, is something that, using historical precedent, these are the names that will go on to outperform once those downward pressures in that industry group subside. That's it for this week, everyone. Have a fantastic weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.